All right, traders, a very warm welcome. I am Devang Mehra from the Financial Analyst, and I welcome you all to our YouTube channel. Firstly, I want to thank each and every one of you. I can't express my gratitude enough to thank everyone who's watching our video every single day, taking out their small time. But it really motivates us and it helps us to create such content. So once again, thank you all for tuning in and spending that time watching our videos every day. So in this video, as I promised, we'll talk about the FII DII data. We'll analyze the data for the coming week and we'll discuss the topic as you read in the description. Are the markets going to crash in this week? So let's talk about all of this. But before we do, you all know the formalities. Please like the video, guys, subscribe to our channel and share this channel with most of your friends. We would love to help everyone, as many people as we can, and create a difference in their lives. So guys, let's get started. So first of all, anything you do in the market, understand anything you do in the market, you need to have some kind of analysis, conclusive analysis to support what you will be doing. So my job today is to I'll show how I read the data, what is my analysis for the data, and how I'll plan my markets for Monday. Okay. So also, before I get started, a lot of people ask me that is the data valid? I mean, can I trade without the data? Yes, you can. There is nothing holding you back. But I always tell people, if you have more knowledge, if there is some more data, more knowledge out there helping out your analysis, making you a better trader, that's better because that gives you a competitive advantage over others. And as I said, markets are not very easy. You are a retailer, you are a client, and it's not very easy for you to survive. So if you have some knowledge augmenting that, helping you to survive for long, that's what you need. So what I will be doing in the first part of the video, for the first 5 minutes, we'll analyze the earlier data. And I will show you how this data impacted Nifty in the earlier sessions. We'll do a very detailed and slow video. So keep on watching, learn from this so you can do it yourself. And then in the later part of the video, we'll talk about yesterday's data, 18th December, and what it can do in the markets for Monday. Okay, let's start with 14th, 15th December. So we'll see what happened on 15th December because the data it came on 15th December will influence the markets for 16th December, number one. So on 15th December, see what happened. FIIs, this is index future, stock future, call, put. FIIs, you can see they were literally not quite shaken with the position was the same. 57,877, 57, they only reduced 216 contracts in index future, so not a big deal over here. They were slightly bearish. If you see the stock future data, they have been doing that again and again. They reduced stock future on 15th by 3,000 roughly contracts. Index call, they increased. This is something I marked earlier also. They increased index call by about 11,000 contracts from 51 to 62,000 contracts. And they have reduced their put, they have increased puts from 77 to 81. So 4,000 increase. So you can see these three columns are bearish. They reduced index future 15 by 216 contracts. They reduced stock future, that's bearish, by 3,000 contracts. And they added puts. They were bearish on the index by 4,000 contracts. But they have bought some calls, 11,000 contracts. That told you very well that, if you see the cumulative bullish pressure was 11,000 and the cumulative bearishness that they've added was just about 7,000. So they were still holding their ground by staying positive in the market. And see what has happened. Markets opened muted on 16th December. Markets opened muted as the data was bearish. But because they were holding calls, market did take a pump up. That is what I'm telling you. If you know how to read the data accurately, you can literally judge what can happen. So you knew very well on 16th December, markets cannot fall because of this huge buying exposure that they are holding in the markets. This is the conclusive evidence I need. That is why I always guide you when to trade breakouts, when not to trade breakouts, where the market should open. This will really help you out. Let's look at 16th December. Now see, I have given it's a rough number. It's not the exact numbers, but it should help you out. So compare the data. So from 15th December to 16th December, you can see FII's increased index future from 57K to 62K. So they were bullish on the index by 5,000 contracts. Then the stock future has been decreasing ever since. From 149, it came down to 146. So they were bearish 3,000 contracts. No problem. Look at the index call data. Index calls, they increased from 62,000 to 75,000. So they have increased 13,000 calls. That is a bullish signal. Also, they were holding 81,000 puts yesterday, and now on 16th, they were holding 74,000 puts. So they reduced puts. That's also bullish. Why? Adding puts is bearish, reducing puts is bullish. So you can see cumulatively, if you remove the stock future data, they were bullish on the markets by about 24,000 contracts. And that is why it's a clean bullish data. If you look at the market on 17th of December, you got a clean upward movement because FIIs were showing you they are holding their ground. They want to get the markets higher. As simple as that. It's not rocket science. It's not Greek and Latin. If you know how to read the data, again, you don't have to read the data and accordingly trade. Your levels, you will follow. I give you the levels every day. But with the data, our plan of action becomes clear that we want to be buyers today. We want to be sellers. We want to trade breakouts. We want to buy on dips, all of that. So guys, if you're liking how I'm doing this, give it a like, share with your friends, get the knowledge out so we can help as many people as possible. And comment, show us some love. Let's go ahead. 17th December, Thursday. Look what happened there. 17th December, they reduced long exposure in index future from 62K to 57K. So they were bearish on the market again by 5,000 contracts. They've again taken it what they were earlier. That's a bearish signal. Stock future is going down every day. That's now a rule of thumb. Every day it got down. So again, this was also bearish. Look at the calls. They reduced calls. How much? From 75,000 contracts to 65,000 contracts. That came down 12,000. Calls coming down is a bearish signal. So again, FIIs, they were quite bearish. But what did they do with puts? They were holding 74,000 puts. Now they holding 53,000 puts. So you can see, if they were fully bearish, they should have gone up. Why is the puts coming down? Are they doing some kind of hedging? Are they booking some kind of profit? So you can see this figure is holding me back. So until now, there was no clean signal to buy or sell. Your markets were saying we are quite bearish, but at the same time, I also want to go up. Why? Because from 74,000 puts, I have gone to 53,000 puts. 20,000 reduction in the puts. That is a bullish signal. So markets had to be mixed. And that is what I told you. Markets will be mixed. See the chart on 17th. On 18th, sorry, you can see what happened. First, markets went down. Why? FIIs were holding lots of bearish sentiment, but markets had to come up because they were not holding as many puts as they were earlier. As simple as that. I hope you are understanding what I am trying to do, because that's really what matters in the market. Okay. So this is about the last couple of days. Now let's do something. Let's talk about what we can do in the markets for Monday. I also hope you're understanding how to read the data, and it's important. Try to watch this video every day. We'll do it every day. We'll try to do it every day, so you can understand how we are reading the data, how it's being used in the market, because now everything is on the public domain. I can't, change my opinion because it's on the public. You all can see that, right? So I hope that helps. Let's talk about what can happen now tomorrow on, Monday. This is the calculations I've already done. Also, you must have got some sheets. I'll just open it out for you. It should be in the download tab, right? So first of all, this is not my compilation. I really want to commend our community member, Mr. Rahul Shah. This is all his work, so I want to give him the due credit, and I can't thank him enough. It's a wonderful, tremendous effort that he does for the entire forum every single day by giving his knowledgeable outlook for the market. I will come to this in a bit, but all of people who are in our groups, you will be getting such data, right? So how to read this? Now it should be clear when you understand the data that I am showing you. Look what happened. 17th December, FIIs were holding 57,000 contracts of stock law index future. Today, they have reduced their contracts by 1,100. So that is a bearish signal. Yes, this has not changed week on week. If you see what it was earlier, if you see a fourth also, the other weeks, it has been around that only. So they have not really, they have kept it constant, I would say. It's not really going down for the bears as much as they wanted. If you are a bear in the market, you really want this figure to come down. So to come down, you want FIs to be short on the market, but it's not really coming down. It's being constant for the last 1-2 weeks. That's one observation. Number two, the FII index future, sorry, stock future exposure is coming down week after week after week. This used to be 2,50,000 couple of weeks back. Now it's 150 in 14th, and now it is at 1,37,000 contracts. So if you see a day on day, it's gone down 5,000 contracts again. So you can see FIIs every single day, they are holding back their longs. That is something to understand. And also, if you see the charts every single day on the daily chart, you are getting some kind of doji because there is confusion amongst the FIIs. They are not buying as much as they were earlier. So they are reducing long exposure considerably day after day. Number 3, let's look at the index call data. Yesterday calls were 65,000 contracts. Now they have gone up 74. This is a bullish signal. They have increased calls by 9,004 contracts, but they have decreased. Also, FIIs are holding index puts 53,000. Today it is 68. So you can see the cumulative bearishness that they are holding. This is about, if you add them up, this will come up to about 21,000. That's the bearish pressure. About 9,000 is the bullish pressure. Just a way to look at things. You can see that their exposure on the bearish side is increasing, but it is still not clear. It is still not indicating a full fall will happen on Monday because they are still holding some longs. Maybe Monday markets can fall and then go up. It's possible. Also, there is a news about Reliance. So if you all are following our Instagram, I've already put it there. I'll just show you that again on our channel, instagram.com/thefinancialanalyst. Sorry, I don't have things prepared, but I will show you our Instagram page. We have already posted the, I don't know why it's not coming, but if you see our Instagram, there is some news about Reliance. They have explored some new, they have dug out some new gas from the Asia's deepest trenches. So that could be a positive thing, but I want to add something. A lot of people are telling me that Reliance is going to go up tomorrow on Monday. It might, if you see the charts of Reliance, huge buying came in the last hour. If you see the last 30 minutes, huge buying came in 1973 all the way to 2005, and volumes are extraordinary. This might be due to the news that has come in. So check out our Instagram page for that. But are you all seeing correlation in the market that you were seeing earlier? I'll rephrase my question. HDFC Bank highest weighted Nifty. In the last couple of days, HDFC Bank has been falling down. If you see the daily chart of HDFC Bank was falling down from 1440 to 1375. Was Nifty Bank falling? No, Nifty Bank kept on going higher. Think about it. Reliance has been falling in the last couple of days a lot. It has fallen from Reliance for 2050 levels all the way to 1960. Reliance has fallen so much. Earlier, if you remember, there was exact correlation. Reliance, HDFC Bank, highest weight in Nifty and Nifty Bank. So when they fall down, Nifty Bank fall down. But when Reliance fell down, did Nifty come down? Nifty is at lifetime highs. Nifty has gone up 500 points. If you see data from November all the way to today, Nifty has gone up about 1,000 points. I don't see correlation. So please don't be surprised. I will not be surprised if Nifty goes down on Monday, Reliance goes up. So please don't have that. Also, if you all see dollar index is going down, right? That means IT will be under pressure, but you can see IT companies are performing. Infosys at highs, lifetime highs. So there is no correlation. Nifty going higher, even IT going higher. Otherwise, it used to be Nifty going higher, IT remains subdued. When Nifty goes down, IT goes up. So I am currently seeing no correlation, right? So please don't have that dogma in your mind. So for FIIs, there is still some bullishness that they are holding, which can help the markets come up on Monday also, right? You must have seen my video that 21st December can be on the top. I will talk about that on Sunday. Let's not mix all those topics. We'll keep the video limited to the data. Look at the client data. What have they done? So it's very simple. If FIIs are bearish, clients have to be bullish. If clients are also bearish, markets will go down because if clients are bearish, that means they are selling. Who is buying FII? So FII buying means market will go up. Now see what clients have done. I have told you something very simple. Unless until this figure, minus 14,000 in index future, unless until clients don't come in positive, because as long as client is holding some short exposure, markets will still go up. So if you are a bull, this is good news for you. So clients have again reduced their index index futures. They are shorting more. They are still this much short. So if this is in short, markets will still stay okay. They will not correct or crash as much as you want. So it is a good signal for bulls. But if you see the data of calls, yesterday clients are holding short 43,000 calls, meaning they were bearish. Shorting calls means bearish. They were bearish by this much quantity. Now they have reduced shorts. So now they have increased bullish exposure by 31,000 contracts. So you can see how bullish the clients are becoming. Clients are becoming bullish. That means that FIIs are becoming bearish and markets will move in direction of FIIs on a normal note. Look at the put data. Clients were shorting puts of 79,000. This is extraordinary, guys. 79,000 puts were short, meaning they were bullish in the market. Shorting puts is bullish. But now clients are short 105,000 puts. That means they are bullish on market again by 25,000 contracts. They have increased bullishness and FIIs are holding some shorts. So that is showing you that please be careful on the bullish side. The big money is getting cautious. The poor money is getting more and more bullish. As I tell you guys, if everyone on the street is saying buy, 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 that means clients are becoming bullish. But the big money is actually exiting. They are planning an exit. But it doesn't mean markets will fall on Monday. There is still this figure I am concerned about, which is in negative. If this figure becomes positive in this week, then markets will fall. You will see some good correction even till 13,000. But otherwise, it's a buy on dip market. Continue that stance. Look at the proprietary traders. These are the HNIs. What have they done? They have increased some long exposure in your index futures. This is it was short. They were short earlier. They have done some buying. This is long. Okay. They have also done some minimal. See, this is very minimal. They have done some very minimal addings in longs in stock future also, from 85K to 87K, about 2,000 contracts. Very, very small amount. So they are not really interested. Look at this. They were short on calls, 22,000, means they were bearish. Now they are short on calls, 63,000. So even the big pros, HNIs, are short on the market. And they were short on puts, 24,000. Now they are short on puts, 12,000. Shorting puts means bearish, because buying puts is bearish. Shorting puts is bullish. If you are reducing the shorts, that is bearish. I hope you're understanding. If I'm short 100 puts, I'm bullish by 100 puts. But if I'm short 50 puts, this means I'm becoming more and more bearish. So they have also become bearish. So data is more bearish right now. And if I show you the commentary given by Mr. Rahul Shah, I just want to give a quick view what he has given, because he's one of the finest traders in our community. And this is the same thing that we have been discussing. So he said that FIIs are still optimistic about the market, because as I said, they are still holding that 57K. This figure in index figure, this is not changing. Week after week, it's being constant. Number two, HNI, which are the proprietary traders, they have sold calls, they are bearish, and retailers have sold puts, meaning you can see this figure, retailers are becoming bullish, they are selling puts. So if retailers are selling puts, they think market will go up, but actually market wants to go down. So what's the conclusion? Yes, stock futures by FIIs are building up on some shorts. Yes, from 220, it's around 137. So it's been bearish. So conclusion is simple. Lack of interest by FIIs in buying is telling us the levels are not really good enough for them. They are losing steam. You are seeing dojis every day at the top. There is not conviction there. So we are losing steam in the market, but trend is up intact. This is something extraordinary view he has given. Trend is intact, and we will see again some buying happening by the FIIs. We will prefer buy on dips, and we can also do sell on rise, but avoid gap ups or avoid breakouts. I will explain the view he has given. Extraordinary. Rahul, I want to commend you if you're watching this video. What has he said? He said that please play by your levels. If 630 level is intact, you are still bullish. That's what we are maintaining in my videos. If this level is there, you are okay. Because see, eventually price action has to follow. If this level is broken, he said you can do sell on rise, because then data is bearish and this level will be bearish, so that client will be fully bullish. And he said, if market gives you huge gap up, so let's say because of Reliance, markets are opening 100 point up, you can't buy. You cannot buy. That's the advice he's giving, and I will maintain status quo in that advice. If markets are giving you, that's what I discussed yesterday also in my video. If markets give you gap up, you are out. You can't buy on intraday. If markets are giving you breakout, I also told you buy but reduce quantity, because the data is indicating that. At the same time, continue to buy on dip as long as the levels are maintained. But when the level of 630 is broken, I will short. Same as Bank Nifty. When the level of Bank Nifty of 30,350 is broken, I will short. But as long as that is maintained, the buying will continue, because FIIs are still holding some calls and the data of clients are still in shorts. So when this becomes positive, market will go down. So just want to address the crashing issue. Please, guys, don't have that view markets will crash. Nothing like that has happened. If you see the American markets, I'll show you the American market. See what happened in America. Huge buying happened. Markets were at day low, but huge buying happened in the last hour at 1:45 a.m. in the night. This is indicating that the stimulus talks are underway and they are doing well. Maybe by today or tomorrow, stimulus announcements can be there. So if that comes in, market is really bullish. It will be a bullish sentiment. So I want you not to be finding tops in the market and short the market. You have to go with the price action, because there is some positive sentiments. Negative sentiments can be if data, if the stimulus is scrapped, or if it gets delayed, that can be a negative sentiment which can help FIs to pull out more money. Also, if Brexit is not approved, if they don't come to a deal, that's negative. If COVID is not controlled, that's negative. If lockdown is extended in more countries, that's negative. So unless until there are not such signals, don't short so much at high levels, because markets can go to 14K, they can go to 14.5K also. Move with the flow. That's the advice I want to give you. I hope I am clear. So if you like this, give it a thumbs up, subscribe, share the video, and don't forget to comment. I will see you in the evening or tomorrow with another segment. Thank you, guys.